Welcome back to the final word here on Bloomberg TV. Will a drop in energy prices put a dent in the gold rally? Our next guest says gold may temporarily pull back, but he's looking for prices to gradually climb to $1,000, hope in the next 12 months.
Well, joining us from Stamford, Connecticut is Kevin Kerr, president of Kerr Trading International. Well, Kevin, gold at the moment, $654.30 an ounce. When does it hit 1,000?
Well, it's anybody's guess when it'll actually hit 1,000, but our projections are that 12 to 15 months from now we'll see a significantly higher gold price. By this summer, we expect to see prices closer to $750 or even $800, depending obviously on what happens with the economy globally and, of course, any geopolitical risk as well.
Well, Kevin, Deborah Costrin here, and as we see gold rallying, we typically see the dollar really kind of coming under pressure. Do you think we'll also see the dollar coming under pressure as we traditionally see that?
Well, yeah, I think some things have changed, and we really have to change our mindset about how the metals are operating. Obviously, with the recent stock market pullback, we saw gold pull back as well. Gold is traditionally a flight to quality vehicle. I think there's a lot of other elements that are coming to play right now for gold. The dollar weakness that we've seen over the last couple of weeks, I think, is certainly supporting gold. I think that relationship is still intact, but it's just a little bit more complex than it used to be in the past.
Well, that's the interesting thing. The relationship between stocks and gold used to be sort of, they moved in opposite directions. Lately, gold's attached itself to equities. What's going on there?
Yeah, very much so. You know, and a good colleague of mine wrote a story about that, saying it's a victim of its own success. And in many ways it is. With all of the ETFs and shares and individuals who are invested in gold mining shares and other markets, it's considered a value asset now, and it's no longer just a flight to quality vehicle. So when the stock market sold off, we saw gold go with it temporarily, and now that it's recovering, we also see gold recovering.
And Kevin, you were talking about the hedge funds and the ETFs, but what else can actually get us to that kind of demand to get us to $1,000 an ounce?
Well, we can't forget about physical demand. And of course, China and the Far East always come into play with this. They're major buyers. We're heading into one of the highest seasons right now for gold purchases. The wedding season in India and China, the year of the pig. There's just a lot of buying in the physical side that's going to drive demand as well. That's going to be a key part of driving that price up. And again, more geopolitical risk and just more interest on individual investors' part.
All right, what about other metals? A lot of focus on gold, but we've seen other metals, both precious and industrial, rising.
Yeah, absolutely. You know, in fact, we like those metals even better. Metals like silver. A lot of people don't even know that silver is such an industrial metal. It's used in many things, as well as for investment purposes. And uranium, which, of course, is what we use in nuclear power, and that is growing exponentially. Russia and China are building nuclear power plants right and left, and it's going to be driving the price for that metal as well.
And Kevin, one more thing. What is the one thing that could really kind of derail this, your theory on $1,000 in gold?
Well, I do think that a serious derailment in China that's actually sustained would slow down physical buying. It's going to slow down the worldwide economy, so it would certainly impact gold as well.
All right.
Thank you very much, Kevin. Some quick word from ABN AMRO confirming the Barclays news that they are in talks. However, they say there is no certainty it will lead to a combination.